Call this meeting to order. I'd like to welcome everybody here today to the 2024 House Financial Institutions and Pensions Committee. We're going to go around. We do have my ranking is already, I want to mention things. We're going to go back around and just do a quick introduction. We do have one new member this year, Representative Thompson. Welcome to the committee. So we'll start with Vice Chair Clifford.
Thank you, Mr. Chairman. Bill Clifford, District 122, Kearney, Finney, Hodgman, Heffapani, and 3 precincts in Edwards County way in western Kansas, 3,200 square miles. Glad to be here.
Representative Laura Williams. I represent House District 30, which makes up parts of Lenexa and Olathe.
I'm Mike Thompson, not the weatherman Mike Thompson, but House District 33, which is from Bonner Springs and then going east, Bonner, Edwardsville, Morris, Muncie, and then the lower part of Turner. Good to be here. Thank you, sir.
Angela Martinez, House District 103, South Central Kansas, Wichita.
Lance Neely, 42nd District, Eudora, Tonganoxie, Easton, and McLeod.
Yeah, Mike Dodson, District 67. That's Manhattan, Kansas, and Ryder County. Thanks.
Good morning, everyone. Great to be here. Mary Lynn Poskin, Kansas House District 20, Leawood and Overland Park.
I'm Rebecca Schmoy, and I have District 59, which is most of Franklin County.
Reese Shue, District 25, Northeast Johnson County.
I am Representative Nick Hoizel. I represent the 97th District, which is basically all of Southwest Wichita and half of Schulte. We do have Representative Sawyer online. Representative Sawyer, are you with us?
I am with you. Can you hear me?
Yes, sir.
Tom Sawyer, District 95, the Delano part of Wichita, just west of downtown.
Thank you. And Representative Donahoe, are you with us? All right, we do have Representative Donahoe online. And Representative White, do you want to introduce yourself? We're calling you out because you're late. Microphone.
I'm Representative White, representing District 115.
Thank you. And we'll go ahead and introduce our staff as well.
I'm David Weiss with the Revisor of Statutes Office.
Melissa Rennick with the KLRD.
Stephen Wu, also with Legislative Research.
Nicole Fielder with Legislative Research.
Good morning. My name is Rich Mergen. I'm the committee assistant.
My name is Colin Hermick. I'm AV.
And Nicole, you are new this year, correct? To this. Okay, awesome. So welcome to the new folks. Welcome everybody back. I just wanted to make sure we all remembered each other's names. I remembered everybody's name. Coach Smith, you want to introduce yourself as well? You're not as late as Gary.
Chuck Smith, District 3, the real Pittsburgh.
So, Coach, when I played football back in the day, when you were late, I had to run laps. You're late today, Coach. All right. So, yeah, welcome everybody back. We have a great committee. We're going to be busy this year. It's a lot of heavy lifting we're going to have to do in a very short amount of time. So there's not much time to waste. I do want to say, if you have legislation you do plan on introducing, please get with me so we can try to get you on the schedule if it's something that we need to hear, and try to get that introduced as soon as possible. We are going to focus on capers again this year. We do have a piece of one heavy lifting piece of banking legislation coming. And we do have some credit union legislation and then some minor legislation. We do also have a few pieces of legislation left over from last year we do need to address early on this session as well. And then we're going to try to do some housing stuff again this year. Most of the housing legislation runs through this committee. Obviously, that's a huge issue in the state of Kansas. Kind of delegated some of that to my ranking member. He's putting some stuff together for us on that. So we're going to go ahead and get started with bill introductions. Does anybody have any bill introductions on the committee? Seeing none, does anybody in the public have any bill introductions today? Seeing none, we'll go ahead and adjourn for the session since we don't have anything. We will now move on to our presentation today. We'll call up Office of Banking Commissioner David Herndon. Give us a just state of the banking update. Commissioner, welcome. We were conversating earlier. You just flew in from Florida a few days ago and got a quick change of the weather there. Just saying that Miami Dolphins are about to face that, I think, in a few days as well. So
we're looking forward to a first round victory, and I'll be watching it from the comfort of my warm living room as opposed to out in Arrowhead. But thank you and good morning, Mr. Chairman and members of the committee. My name is David Herndon, and it's my good fortune to serve as the Kansas Bank Commissioner. Thank you for the opportunity to appear before you this morning and to talk about the agency that I lead, which is the Office of the State Bank Commissioner, also known as OSBC. I'm going to share with you a recap of the banking industry in Kansas, as well as a summary of all of the non-depository and non-bank state chartered financial institutions that my office regulates. I'd like to welcome the new member and welcome back the members that I've had the privilege of working with before. We continue that, looking forward to working with you. The OSBC, I believe, is a premier state agency, and I know it's held in high esteem amongst our peers around the country. Our staff is exceptionally good at what they do, and as I said, it is my good fortune to work with them. As our name suggests, the OSBC regulates and supervises the 170 state chartered banks, 32 of which have trust departments, plus 13 state chartered trust companies. But as you'll see this morning, our regulatory responsibilities extend much further. We also regulate 12,763 non-depository financial institutions or entities who extend credit to Kansans. They grant residential mortgages to Kansans. They service those loans for Kansans. They transmit money for Kansans. They provide credit services to Kansans and to this state's only technology-enabled fiduciary financial institution. TEFIs are unique. Technology-enabled fiduciary financial statement goes by the acronym TEFI, and they are unique to Kansas, having been established by the 2021 Kansas Legislature. There's only one TEFI that's been established since the act was signed into law and the charter was granted by legislative action. We work closely with our federal counterparts, primarily the Federal Reserve Bank and the Federal Deposit Insurance Corporation, or FDIC, to perform our duties, and we have strong relationships with the trade associations representing the industry, both in Kansas and across the country. As you'll learn in this morning's presentation, the Kansas banking industry is very healthy and very strong. I'm joined today by Deputy Commissioner Tim Kemp, Deputy Commissioner Mike Insbrenner, and General Counsel Brock Rayler from our office. Our agency structure operates in 5 divisions. The Division of Banking and Trust regulates and supervises state chartered banks, trust departments, and trust companies, and TEFIs. Deputy Commissioner Kemp is responsible for this division. The Division of Consumer and Mortgage Lending, or CML, regulates our non-depository institutions that are involved in consumer lending in Kansas. These include the mortgage businesses, the money transmitters, the consumer credit companies, and debt management services. And Deputy Commissioner Mike Insbrenner is responsible for this division. Both divisions are accredited by the Conference of State Bank Supervisors, CSBS, which is a nationwide organization of banking regulators from all 50 states, the District of Columbia, American Samoa, Guam, Puerto Rico, and the U.S. Virgin Islands. It also has U.S. congressional authority and oversight. Our legal department works closely with the legislature regarding statute, rules, and regulations that are in effect or are being considered. The division also represents the agency, the State Banking Board, and me as commissioner in legal matters and aid our regulated entities in interpreting Kansas laws. General Counsel Brock Rayler is responsible for this department. The administration division runs the office side of the agency. Barb Albright is responsible for the department that keeps us open, keeps the lights on, makes certain the bills are paid on time. She handles our budgeting, accounts payable, accounts receivable, training, travel, HR functions, all are housed in the administration side. And the fifth division is our information technology or IT department. OSBC does not rely on the state's IT department or staff. Our IT department is led by Matt Hodges. They also conduct IT examinations on all businesses we regulate and examine. The agency is staffed with 112 employees. We currently have 6 openings, primarily in the financial examiner areas. We have, in our budget that's submitted for this year, we have requested 2 additional trust examiners, and I'll get into that in just a minute. OSBC is a 100% fee-funded agency paid by bank assessments and CML licensing fees. Our fiscal year 2024 budget request is slightly over $13 million. 12.9 million of those funds will come from that, and we also administer the Consumer Education Settlement Fund with $150,000 annually. That OSBC is the sole administrator of this fund. As I mentioned, there is zero reliance on the State General Fund for operations. And in fact, we transfer $100,000 to the State General Fund with annually from our assessments and fees. Our banking division, I'd like to address now. As I mentioned, Deputy Commissioner Tim Kemp is responsible for this division. We conduct safety and soundness examinations on all regulated banks and trust companies once every 18 months or more frequently if the institution's asset size or if it's deemed to have some sort of troubled nature to it. Those examinations will be more frequent than 18 months, usually on a 12-month cycle. We do not conduct safety and soundness examinations on the state's only TEFI, as the TEFI Act does not permit such an examination. We do conduct Compliance, Bank Secrecy Act, Anti-Money Laundering Act, and Information Technology examinations on every regulated entity, including the TEFIs. We are permitted to alternate examinations with the FDIC and the Federal Reserve to meet that 18-month mandate. And sometimes we conduct joint examinations with our federal counterparts on large and or troubled banks. At the end of calendar year 2023, there were 170 state chartered banks in Kansas, 32 of which had active trust departments, and there were 12 trust companies. Those 170 banks and 44 trust departments or companies had total assets of $132.2 billion. But I'll speak in a moment to a new Kansas trust company that just began operations on January 2nd. That's going to have a sizable impact on our trust assets. Our banks reside in one of 3 regions in the states. Our headquarters are obviously in Topeka, but we maintain regional or field offices in Dodge City, Erie, Hayes, Lenexa, Salina, and Wichita. All trust operations are based in the Topeka and Lenexa field offices. The examination process, as I mentioned, we conduct safety and soundness examinations on regulated banks following international industry standards and assign ratings in capital adequacy, asset quality, management, earnings, liquidity, and sensitivity to market risk. The acronym is a CAMELS rating. And the components are in compliance with the Uniform Financial Institutions rating system. Our examinations on regulated trust companies and trust departments assign ratings in management, operations, internal controls, and audits, earnings, compliance, and asset management in compliance with the Uniform Interagency Trust Rating System. Both the International Trust Rating System and the Uniform Financial Institution Rating System is a universal system that all regulators follow. I mentioned we don't conduct safety and soundness examinations on TEFIs. That's because we can't. The TEFI Act in Kansas specifically disallows an examination to consider earnings as a component and assigns any goodwill asset as a capital component. These directives are departures from those two rating systems that I mentioned, and as well as a departure from generally accepted accounting principles. We do have some an examination conducted by OSBC or our federal accounting department. We determine a bank or trust company as being operated in an unsafe, unsound, or non-compliant manner. It's considered a troubled or a problem institutions. These are institutions that have on a rating of a 3, 4, or 5 on a scale of 1 to 5, with 1 being the highest rating. 3, 4, and 5 indicates that there is some sort of problem or concern expressed by the exam. We have several enforcement actions available. The least aggressive is a board resolution, which is an informal agreement between the institution's board of directors and our office that says they will address the cited weaknesses and problems. It's followed by a memorandum of understanding, also an informal agreement that is more specific as to actions and timing for curing of these. And then the more formal actions, that be formal meaning they become public, are consent orders entered into with the institution and cease and desist orders. As these issues become more troubling, the enforcement action also becomes more aggressive. I'm pleased to report that of the 170 banks, 44 trust departments and companies chartered in Kansas, there's only 5 banks and 1 trust company that are rated 3, 4, or 5 as of the end of 2023. But I will tell you that I'm not as optimistic today as I was when I appeared before you last year, that this number will not grow. One additional bank that was examined by OSBC during the 4th quarter of 2023 was downgraded to a 3. And additionally, 2 other banks have been downgraded to a 3 by the Federal Reserve Bank based on unrealized losses in these banks' investment portfolios. The ultra-low interest rate bankers and borrowers had grown accustomed to since living through the throes of the 2008 financial crisis have certainly come to an end, and interest rates are now at the highest level since 2001. We came out of that economic crisis 10 years ago and sailed quite smoothly for several years. Then the COVID pandemic hit, accompanied by geopolitical and environmental events that negatively impacted our economy and raised inflation to very high levels. This has put new strains on banks' portfolios and spreads that bank management in too many cases has been slow to adjust. Consequently, banks are seeing component ratings downgraded, leading to composite rating downgrades, and more banks are being troubled. This committee should recognize, as we do, that Kansas banks are not immune to what goes on in the world. So we will most likely see a noticeable increase in the number of banks on our troubled bank list and the severity of those issues that the banks are confronting. This slide will demonstrate the number of Kansas chartered banks, both state and national banks, and the declining number, approximately declined by 10% in the past 5 years. But even though we have fewer banks, we have 22% more assets under management and nearly a 40% growth in the average bank size in our state during that same time frame. The bar graph shows the increase in the assets and the decrease in the number of institutions, primarily because of mergers and acquisitions. Some of those are in-state, some of those are intrastate, where we have lost a couple of banks, one large bank in particular that was acquired last year by a bank with a charter in Colorado, and it took $1.6 billion of our bank assets out of the state. And it didn't take them out of the state, it just took the chartering authority out of the state. But it's happening in all banks in the United States too. You can see with this chart from 2018, when there were 5,400 banks, at the end of the third quarter of 2023, that had fallen to 4,600 banks. But the assets under supervision grew from 17.9 billion to 23.4. This is according to the US FDIC. The 5 largest and the 5 smallest banks in Kansas are demonstrated on this slide, with CrossFirst Leawood being the largest bank in the state, and the State Bank of Burton at $12 million in assets being the smallest. The large banks are obviously more complex and diversified than a small bank will be, so it offers more sophisticated services traditionally, and there's a lot more to examining a large bank and saving with than there is a small bank that offers the traditional checking and savings accounts and consumer loans and that sort of thing. Kansas is one of 12 banks in the state that does not have a bank with total assets over $10 billion, but as you can see, we're getting close. And it would simply take a merger of equals or something similar to that for CrossFirst to hit that $10 billion threshold. We are preparing to that because there is a different protocol for banks over $10 billion and we've not been faced with any of those, but we do have staff training and we have arrangements with nearby states that have large banks that we can shadow on their exams, so our team will be ready if and when Kansas receives its $10 billion bank. The next banks, as I mentioned, in Kansas are overall healthy. This chart will determine the capital levels and the return on equity, as well as a leverage ratio that is demonstrated for the Kansas state chartered banks. Now, we don't have any authority over national banks, and there's like 27 national banks in Kansas, but this is simply the Kansas chartered banks. And you can see that as of the end of the third quarter, banks showed a $6.4 billion in capital and 13.27% in Tier 1 capital. Return on equity was also healthy, and the leverage ratio is strong. The leverage ratio measures the ability of a bank to cover its exposure with Tier 1 capital. So we use this ratio calculation to ensure that banks have enough liquidity on hand to meet the demands of their customers. Typically, a ratio above 5% is deemed to be an indicator of a strong financial footing for the bank. And as you can see here, our banks are double that level. We also have a diverse mix of assets, with about 2/3 of the assets in loans, another quarter in securities, cash, fixed assets, and other assets determine the rest. But as I mentioned, the loans at 2/3 of total assets, these are car loans, mortgage loans, business loans, ag loans, all types of loans. And the securities, a large portion of these are securities that are municipal securities issued by state and political subdivisions in Kansas. So Kansas banks are hugely supportive of the Kansas economy and their Kansas consumers. Talking a moment about trust companies, as I mentioned, 12 trust companies and 32 bank trust departments regulate and hold $73 billion for their clients. Trust companies report their holdings only at the end of each calendar year, so they're reporting this month and we'll be able to update this at the end of 2023. But we do know that, as I mentioned, that a brand new trust company whose trust charter application was approved and issued by the State Banking Board in August 2023 commenced operations on January 2nd. Midwest Institutional Trust Company is an affiliate of Midwest Trust Company headquartered in Overland Park. It was established to take over the trust assets of BMO Bank, the U.S. subsidiary of the Toronto, Canada-based multinational investment bank and financial services bank. The value of this transaction exceeds $65 billion, resulting in a near doubling of the trust assets managed by Kansas institutions, and that just occurred last week. We're both excited and delighted about this and gearing up to meet our regulatory obligations. One of those ways that we're doing that, and I mentioned earlier, is to request approval for additional staffing by recruiting and hiring 2 new financial examiners whose specialty will be trust examinations. So as I mentioned, on the 24th, January of 2024, we expect the new trust assets to be nearly $150 billion. Moving on to the information technology side of the shop, we do conduct both bank and non-bank regulated entities IT processes using one of 2 primary work programs. We focus on IT management and oversight, business continuity and disaster preparedness, incident response preparation, IT support capabilities, cybersecurity controls, and risk management. He said we focus on both compliance with applicable laws as well as adherence to the industry best practices for IT governance and cybersecurity. Our IT exams typically occur concurrently with safety and soundness and compliance examinations, but not always. And the applicable laws and regulations include, at the federal level, the Graham-Leach-Bliley Act, Federal Banking Guidelines for Information Security Standards, the FTC's Information Security Safeguards Rule, and at the Kansas level, the Kansas Financial Institution Information Security Act. We also, as we do with safety and soundness exams, do joint exams with our federal counterparts, again, the FDIC and the Federal Reserve Bank. In the non-bank space, IT examinations can also be multi-state functions for larger licensed entities to promote efficiency for both the agency and the financial institution. IT examinations are an ever-evolving field. They continue to involve with a focus for the agency on financial industry alongside the ever-changing threat landscape, ransomware, cyber attacks, that sort of thing. Numerous regulatory initiatives continue to occur nationwide, and that includes the 2023 release of the revised ransomware self-assessment tool and the community banking report of ransomware's lessons learned. These were released by federal officials. So we are also expanding and evolving our examination functions and our team. You can see here a timeline of what has occurred since 2019. Moving on to the consumer and mortgage lending division overview, and we refer to this as our CML division. It has 2 primary responsibilities. First, to license all non-depository entities that conduct businesses for consumers in Kansas. And second, to examine those entities for compliance with state and federal laws and regulations. It also, as a sidelight, administers grants to Kansans to support consumer education and awareness, and it is responsible to research and try to administer any complaints from consumers about any of our regulated entities. The CML focuses on these state laws, the Kansas Mortgage Business Act, or the KMBA, dealing with non-depository mortgage lending, brokering, service, and loan origination in Kansas. Many of the provisions of the KMBA were modified following passage of the SAFE Act by the U.S. Congress in 2009, setting new requirements for loan originators and mortgage lenders. We also administer the Uniform Consumer Credit Code, the Kansas Money Transmitter Act, and the Credit Services Organizations Act. CML licensing activity. This is an interesting slide because it shows the impact of what's happened in the last 18 months in the U.S. economy in terms primarily of the mortgage function. Note halfway down the slide that a year ago, we had 12,575 mortgage loan originators. At the end of 2023, that had fallen to 8,700. This is again, not unique to Kansas. It reflects of what's going on with the rising interest rates in mortgages and that sort of thing. And a lot of these were individuals who were, if you will, contractors or represented mortgage originations that would ultimately be sold to people like Rocket Mortgage or the people that are advertising during the Chiefs game on Sunday. But that has had a dramatic reduction in the number. I mentioned that we do some consumer education initiatives. These are funded by fines and penalties that we collect as a result of enforcement actions. Funds are deposited into a restricted account, Consumer Education Settlement Fund, and used for consumer education. The OSBC is the only agency that administers this fund. We do it by providing grants and supporting consumer education programs statewide. The grant supports programs for both students and adults. And since 1999, we have provided over $5.8 million in grants for consumer educations, averaging about $150,000 annually. Grantees have served more than 25,000 consumers and students in fiscal year 2023. And we proudly sponsor the Kansas Financial Scholars Essay Scholarship Contest each spring, where Kansas high school seniors demonstrate knowledge of money management and compete for scholarship funds. Last year was the 9th year for the scholarship contest, and $10,000 was awarded to high school seniors who are continuing their education in Kansas. Additional information on these grants and applications are available on our website and with links to the sponsored programs. Here's the list of grant programs funded in fiscal year 2023. You can see that over 25,000 students and consumers and adults were served in fiscal 23, ranging from one-time grants to continuing operations for very worthwhile financial education programs. The Kansas Financial Scholars Essay Scholarship Contest, as I mentioned, the OSBC is the sole sponsor of this scholarship, and it is a contest for high school seniors who submit essays demonstrating their knowledge of money management skills. Because we regulate businesses that are in the business to serve consumers, sometimes there's going to be some inquiries or complaints about services. So in 2023, we received approximately 1,400 inquiries, both inquiries and complaints. And you can see here on the pie chart the types of complaints that we get, and as well as the number. Our OSBC's CML division will propose legislation for this session that will affect the Kansas Money Transmitters Act. to repeal and replace the current act with an act negotiated with the money transmitter industry. The Kansas Uniform Consumer Credit Code will be introduced to modernize the code. This is the most substantial modernization since the code was enacted in 1974. And then the Kansas Mortgage Business Act to remove all remaining mortgage provisions from the UCCC to the KMBA. So that will complete that. The banking side will introduce a banking code bill that will permit Kansas trust companies to accept an assignment of all trust as a succeeding custodian from out-of-state banks and trust companies. Back as I mentioned, the new trust company is acquired that business from Bank of Montreal or BMO, and this will accommodate not only them, but any other trust company that acquires custodial assets or trust assets from an out-of-state business. We've added language to streamline the application process and also set a timeline on if an application is submitted, but no action is taken by the applicant, that there is a time frame that they will, at which time it will cease or be withdrawn. So that concludes my remarks. The last slide here is the contact information for me and the managers in our 5 divisions. Please never hesitate to reach out. We're happy to answer questions or provide guidance or do research or whatever else that the committee might need. So thank you, Mr. Chairman. Thank you, committee.
Thank you, Mr. Commissioner. Will you stand for questions? Questions from the committee, Vice Chair Clifford?
Thank you, Mr. Chairman. Thank you for your presentation, Mr. Hunter. This year we had a bank failure in Southwest Kansas. Kind of a two-part question, because I understand there were some risky assets involved. One, were they on the naughty list before? In other words, were they a 3, 4, or 5? And also, given the rapidity of money movement and things like Bitcoin and Boeing stock going down quickly, how can your examiners, possibly keep up with that? So kind of a two-part question. Thank you.
The bank that you're speaking of that failed in August was the Heartland Tri-State Bank in Elkhart. It had not demonstrated any problem capabilities. It was not considered a troubled bank. It was victimized by a cybersecurity event that is still being investigated, now being investigated by federal authorities. The bank failed in a week, and it failed through what I have read is called a pig butchering scheme. And that is by what the FBI referred to it as, where confidences are gained by the bad guys and rewards. In this case, it was investing in some sort of cyber currency, Bitcoin or otherwise, that the banker believed was going to provide a very handsome return, and in fact, it was at such a large scale that it destroyed the bank's capital and created an immediate insolvency of the bank. We learned about it on a telephone call from one of the bank officers on a Saturday. We assembled a team on a Sunday. We're at the bank on Monday this was a Fed member bank. So the Fed was sending staff, we were sending staff, and the bank failed because it could not recapitalize itself by Friday of that week. So it was a unique and isolated event. Our involvement ceased on Friday when we named the FDIC receiver, so the Feds stepped into our shoes. And as I understand, the investigation is still underway.
And if I can interrupt there, just reiterate, no depositors lost money.
That's correct. We were successful in finding an acquiring institution. It was a bank in a county just north, a national bank. So they reopened. We closed them at 5 o'clock on Friday. They reopened Monday as a branch of that bank, and all depositors' funds were protected.
Are you aware, I'm sorry, Vice Chair, are you aware on that of how much the FDIC lost in that. How much that cost the FDIC?
I believe that the hit to the FDIC insurance fund was about $54 million.
That's right, sure.
Second question. Thank you, Mr. Chairman. Just curious, do the fees move with the charter? So when this large bank money went out of state, do your fees go out of state too?
Typically, yes. We assess fees based on the size of the institution. Larger the institution, the more fees they pay. So when the bank that I referred to that went to Colorado was the Bank of Blue Valley, headquartered in Overland Park. It was acquired by the Colorado. So yes, we not only lost the assets under control, but subsequently the assessments that Bank of Blue Valley had been paying us.
Thank you. Thank you, Mr. Chairman.
Representative Williams.
Thank you, Mr. Chair. Going back to the bank failure and looking at that, I know you said it was an isolated instance, but are there any safeguards that you are looking at as a bank commissioner to protect other banks from being able to fall victim to this pig? I forgot what you said. It's pig butchering scheme.
There's always a scheme, and we try to stay on top of those. One of the ways that we do that is, as I mentioned, the M component in the CAMELS rating stands for management. So we look at policies and procedures, not only the written policies and procedures, but are they being enforced appropriately? Is there an appropriate separation of duties so that it won't eliminate, but it might lessen the risk there? Kansas is unique because a number of our banks are family owned or tightly controlled. And the board of directors and even the officers of the bank might be a family. Wife, husband, children, grandparents, aunts, uncles, cousins, that sort of thing. So it becomes increasingly important when we examine the management side. Is there an appropriate separation of duties? Are there appropriate secondary and tertiary checks to make certain that the policies and procedures that have been adopted and are industry accepted are being operated? So that's the primary way that we can do it. But as I mentioned, we got a phone call on a weekend, and by 6 days later, the bank was failed.
I just want to comment on that. I do think that, looking at the timeline of what had happened and how quickly you guys responded, I think that is great. And thank you for being able to step in on a weekend and, protect our communities in Kansas and those depositors as well. I think, as we're looking at state chartered banks and these banks in these even small communities, maybe even run by families, the livelihood and the health of those banks is crucial to the health of those communities out in rural Kansas. So I appreciate your work on making sure that depositors didn't lose any money with that and being able to do that quickly and swiftly. Thank you, Mr. Chair.
Thank you. I would like to point out, to follow up on that, that because this bank failed in August and in March, there were 3 very public, large failures in the U.S. SVB, Silicon Valley Bank, Signature Bank in New York, and First Republic Bank. The smallest of those 3 failures was, in asset size, was 5 times the aggregate of all Kansas banks' asset size. So there was obviously a jump to conclusions in August when the bank failed, and those 3 bank failures were liquidity failures based on unwritten losses in their investment portfolio. So our phones were ringing off the hook from press going, oh, okay, and this has now fallen to a tiny bank in Southwest Kansas. Oh my gosh, the world's coming to an end. In fact, it had nothing to do with the issues that failed those 3 banks in March. And a great deal of effort was, hopefully we were successful in getting that message out too.
Representative Dodson.
Thanks, Mr. Chair. Thanks for your testimony. I think you said that you had less confidence testifying today than you did last year. You showed the chart that showed the number that had perhaps moved from a 1 or a 2 down to a 3. Are the same trends in those banks that moved to 3 resident in the banks that are currently rated number 1? Or are they, which would imply a general weakness, or are these basically isolated to the ones you pointed to and that are in category 3?
The banks that have seen a decline in their CAMELS rating have been impacted in a huge part based on the interest rate rise that we've seen in the last 18 months, where the Fed took interest rates up 550 basis points. So deals that worked 3 or 4 years ago when they were being stressed with a 2 or 3% interest rate difference and would still cash flow, suddenly got stressed with a 550 basis point, 5.5%. So deals that work at 3% don't work at 8%. And you had bankers and bank borrowers who had never operated a business or extended credit in a high interest rate environment. Interest rates are as high as they've been in 2021. So you think about, okay, even if you have a 40-year-old banker or a 40-year-old business owner, they weren't working or had just started their career working when interest rates were this high before. So there is a huge challenge on that. As to your point about the stresses of a 3 or 4 or 5 rated bank to a 1 or 2 rated bank, it's my opinion that the majority of the issues are management issues. They are not asset quality issues. They are not capital. They are not earnings. They are management impacted with the liquidity because bankers, like anybody else, when interest rates were low, you start looking for yields. So maybe they extended their investment portfolio farther than they normally would. In some cases, they've extended it to 25 or 30 years with a 2%, 2.5% earning asset. Now that the prime rate is at 8.5%, the cost of funds are at 5.5%, they're losing money. So it's stressing on that. Was it a management decision to extend? Maybe. Is the bank strong enough to absorb that unrealized loss in their portfolio? We hope so, and that's what we take a look at. We examine the banks individually, looking at the management, looking at their plans, looking at their processes, looking at their portfolios, and that sort of thing. I'll point out that approach is somewhat unique to our federal counterparts who are more of taking an analytical approach and saying, okay, the quarterly call report that you just submitted indicates that your unrealized assets loss, your unrealized loss on your investment portfolio have put your capital at peril. We've taken and we have the opportunity because, as I said, we have 170 banks. The feds have 4,500. So we have taken a more personal approach as to how you're managing through this. Can you manage through this? Do you have the capital? Do you have other funding sources so you don't have to sell those securities at a loss? And instead, just write it. The worst thing that happens is you hold it till maturity and you get 100 cents on the dollar back. It's like buying a new television and then see the same television go on sale. And you think, man, if only I'd waited, if only I'd have known. Doesn't mean the television has stopped working and it doesn't have value. It just means that the market has changed, in this case, against you. So I hope that answers your question.
Yeah, thanks very much. When we had the SVB failure, they had, I think, maybe rightly so, had purchased bonds at a very low rate. And as you said, then when it came time, when people made demands on the bank, they would have to sell those assets at a very low rate at a high loss. So that And just kind of anecdotally here, in 1979 or 80, you may recall that we had 17, 18% interest rates. So the ability here to go from whatever we had from maybe 8% down to 3% and then bounce back seemed to be more manageable than it would have been in 1979, 1980. So when you said most of our issues now are management rather than assets, that kind of was of interest to me. You know, how do you,
Again,
I don't know, particularly with family banks. I mean, when I go into a big bank, there are people in there that have been in there for a long time and have specialized training, whether they're in school or whether they've had it through their own experiences. And I worry about the abilities of some of these banks. I don't want to cast aspersions, but you know, some of the smaller banks just don't have the kind of the expertise or experience to maneuver through that.
you are absolutely correct. And anecdotally, you mentioned when interest rates were 17, 18, prime rate got to 21% during the Carter administration. And I was beginning my career in bank management at that time and buying a home. And I thought I hit a home run because the first house I got a 16% mortgage. And I tell that to my staff now and to the bankers that we examine now. And they look at me like, you have to be the dumbest guy that's ever walked the planet to sign a 16% mortgage. Well, it was a good deal then. Obviously, I refinanced it as soon as I could. And that's what people did recently. They were taking mortgages at 4 and 5%, which is a good deal, but mortgage and interest rates dropped into the twos. So obviously they refinanced it and saved it that way. Your point about the banker that is in a large bank that has systems and processes and staff to help them through is very accurate, because a lot of our banks, you are the guy that opens the door in the morning, you wait on the customers, you make loans, you sell CDs, you invest processes, you do the HR, you know, you wear so many hats that again, the stress and the focus on that management capability comes to the forefront.
Thank you very much. Thanks, Mr. Chair.
Any further questions from the committee? Representative Lewis.
Thank you for your comments. They're very informative. I have another question about the failed bank, and I understand it may be premature because, as I understand it, it's now being investigated by criminal federal authorities, and it's sort of out of your hands. Is that accurate?
Yes.
Okay, but anyhow, to the extent you can enlighten us, can you tell us if the investment that this bank made, if, for instance, you, the banking authorities, had known about it beforehand, it would have been one that you would have permitted, or is this one that was would not have been permitted had you known about it?
We absolutely would not have permitted it. Further, had we even suspicioned that the bank was involved in this, we'd have stopped it at that point, using every available resource that we had to stop it. It was that bad. It was that ultimately it was the failure of the bank. And you are correct. As I mentioned, our involvement ceased the moment we named the FDIC receiver for the institution. The ongoing investigation is being conducted by people who carry badges and handcuffs and that sort of thing. We don't. People like the FBI, the Inspector General is involved in it. We have been interviewed by the Inspector General, but they have not given us any time frame as to when to expect a report or what that report might say.
I got one last question here, and then we'll move on, Commissioner. You have six current openings of 112 authorized employees. Is that pretty much on par? Is your office being impacted by the tight labor market, recruiting and retention? What's all that look like?
We are constantly dealing with those stresses on staffing. We are unable to compete with our federal counterparts in compensation. We are even unable to compete with our adjoining states. So areas like the Kansas City area that has, Missouri right there as well. We regrettably oftentimes are the farm team where we recruit and train and then lose to the FDIC, the Federal Reserve, without a relocation of time and that sort of thing. We have taken some steps to try to mitigate that because we are still pretty much remote workers, which is the nature of our exam. We do examinations for our institutions. The Federal Reserve in Kansas City is now requiring all of its exam staff. They've called them back into the office. The FDIC has done, in Kansas City office has done the same thing. We are still working as remotely as possible. So we are trying to offset what we can't pay them in salaries by saving them in commuting expenses and daycare perhaps and that sort of thing. So yes, it is a challenge.
Okay, I appreciate that. And I do appreciate working with you and your staff. You do have a great staff. And, they've done a lot of work this off session that we're hopefully can get through the finish line this session. So thank you, Mr. Commissioner.
Thank you.
All right, up next, we will call up Alex Orrell, Senior Vice President of Government Relations for the Kansas Bankers Association. Alex, welcome to the committee, sir.
Hey, good morning, committee. Welcome back, and good to see so many friendly faces, and appreciate what you all do for your constituents and the state of Kansas. I am Alex Orrell, Senior Vice President of Government Relations for the KBA. I do want to take this opportunity to thank the commissioner for his comments and the work that him and his team do. Deputy Commissioner Brenner and Kemp and General Counsel Rayler, they do a fantastic job, and they are great to work with. I do want to do an official welcome to Representative Thompson. Welcome to the Banking Committee. Sometimes it's a riveting conversation in this committee at times, but it's critically important to our economy and to your constituents. I do want to make an introduction. I do have Kelly Van Zoll on our team, recently promoted last year to our Vice President of Government Relations. As you all know, that is definitely earned and is a fantastic member of our team. And then we also have J.W. Wells, who is our Ag Bankers Division Coordinator and Government Relations Assistant. He's new to our team as well. I'm going to take this opportunity in essence of time, just to break up my testimony as first part KBA, a few highlights, and then do some industry things that we're looking at. And those are all included in my packet. There's a lot of information in there that I'm not going to go into deep, but if you want to have a different conversation, more timely or in depth, happy to have that. But the KBA, for the record, we were founded in 1887. And our mission statement is: together we support our member banks and bankers with leadership, advocacy, and education to benefit the communities and customers they serve. We take that very seriously. Banks are businesses too. I know we just talked about failures and things like that, but banks are businesses too. I want to reiterate that comment. But the KBA does everything in our power to help support our member banks and the efforts to support their communities. KBA is a very different association than you might typically see as well. Our staff is 40, and we also are up to 13 attorneys. We have three Ls that have accepted full-time employment as soon as they get done with us because of the compliance, because of a lot of the things going on in the industry that they need help. And that is our role, to provide those services. And we're proud of those services because we do represent 98% of the banking industry in the state. And we also represent more than 20 of the out-of-state national banks that operate in our state. So we do have a very large membership that demands a lot of us, but we have a very fantastic team that can do that. And we also do represent the trust companies as well, that Commissioner Herndon mentioned too. So I do want to appreciate the committee's work on some trust legislation recently. That's going to be huge, pay huge dividends to our state in terms of workforce and jobs in the economy in the Kansas City area specifically. So thank you for your work. On page 2 of my testimony, you'll see kind of a breakdown of our divisions and services. I'm going to highlight 2 of them specifically. On the education front, the KBA last year embarked on a new initiative partnering with Fort Hays State University. We are actually in a contractual agreement with the university to help manage and run the Robbins Banking Institute at Fort Hays State University, which is within their business school. That partnership is going extremely well, helping with curriculum development, marketing, industry, and industry, image with workforce. That there's a lot of jobs in the industry that a lot of people don't think about. IT, compliance, marketing, business development. It's not just lending. There's so many things more to banking than just traditional banking that a lot of people think. And we're trying to get that message out all the way down to kids in grade school, even. And working with the OSBC specifically, they mentioned some of their grant program, working with them very closely on financial literacy initiatives. That's part of our strategic plan of the association and something we take very seriously and trying to do the best that we can because that has such a ripple effect if someone is not financially literate or financially educated for their whole entire life. And so we're working on that and appreciate the OSBC's efforts. The fastest growing part of the KBA is our legal and consulting services. We have, like I said, we have 13 full licensed or 13 attorneys on our team. We provide outsourced compliance for 100 and or outsourced legal services to 127 of our member banks, where they can call us and we can actually provide them legal guidance. Kelly actually was residing in our legal department until January 1 of this year, providing those services. Because as the commissioner mentioned, and as Representative Dodson talked about, expertise in specific fields. There's a lot that are small banks still, 5, 6, 7, 8 people on that team. They're wearing so many different hats. And so we put this service out back in 2010 to provide that extra help because the goal is to sustain the community bank model. I do not believe Kansas is best served with 20 banks. I don't believe our national economy is best served with 20 banks. Access to credit, competition, free market principles are good for the Kansas economy. Last year, 2 years ago, we entered into another initiative on compliance services where we will actually act as the outsourced compliance team for the bank and work with them as they're going through their regulatory exams. We are up to 10 member banks that are utilizing that services where we will act as their compliance officer. That is a rapidly growing piece of our organization, and there's a lot more banks on the waiting list wanting that service. But we need the talent and we need the workforce to provide those services. But once again, the goal is to sustain those community banks. On page 3 of my testimony, you'll see bank industry statistics, just highlighting some high-level view of the banking industry. We have the 6th largest amount of banks in Kansas in the country, but that number is rapidly shrinking, and it is extremely concerning. But we do have a diverse background of bankers that provide a lot of services. And we have 21,000 bankers that provide services in every single county of our state. We're proud to report that because we finance 99% of the business industry. And just in 2022 alone, financed 150,000 different individual small business loans, totaling more than $4.7 billion. So very active group that, once again, it's about the community they serve and they want them to succeed. On page 4, you'll see the FDIC state profile that highlights all of the technical number-driven data of the banking industry. And I'm just going to highlight a few of those pieces right now. Number of institutions, once again, shrinking. Not a good trend. We got to figure out a way to slow that down for the benefit of everybody. Tier 1 leverage, that's the capital that the commissioner mentioned. Our banks are capitalized and are in a very good position. And from 2021 to Q3 of last year, the capital ratio has actually gone up to 10.82%. So they are very well capitalized, being able to fulfill the duties and needs of their communities. On page 5, the OSBC does a fantastic job doing a state profile of the state chartered banks, but we also have nationally chartered banks. And on page 5, you'll actually see a report provided by the Office of the Comptroller of Currency, which regulates national banks. And I want to highlight on page 6 of this, when you think national banks, a lot of people think, oh, it's the really big banks. No, that's not necessarily the case. There is a significant amount of national banks that in Kansas that are community banks. They're not just one and the same, that national means big. they're choosing their regulatory authority and who regulates them. We have a bank in Kansas that's $15 million in assets. That's a national bank. So you'll see the list of the top 10 largest national banks in Kansas, which are all community banks. So I want to make that distinction here because a lot of people have asked me about that. You can see on page 7 on growth trends and concentrations. I'm not going to get too deep in there because of time. Page 8, you'll see something that my president, CEO, and I love to call oiling the frog. You'll see back in 2001, we had 390 headquartered banks. We're down significantly lower, around the 200 range, and that's a trend we need to right. And part of that, or major part of that, is the regulatory burden. You asked a banker 20 years ago, 20% is banking, or 20% is compliance, 80% lending. It's flipped. And I want to be very clear to this committee, we're not against regulation. We're dealing with people's money. That's very serious. There should be regulation. But there needs to be reasonable regulation. You shouldn't be regulating people out of business. And frankly, we're starting to see some of that. On page 9, you'll see the alphabet soup of the federal regulatory agencies and state agencies that we work with, from the OSPC, the FDIC, and lastly, the Consumer Financial Protection Bureau. There is significant government overreach from the federal side of things here. That, last year alone, the U.S. Congress, I think, passed 22 pieces of legislation total, which is the lowest total since the Great Depression. But that doesn't stop federal regulatory agencies from still moving, and they are doing things that we don't believe is in their legislative or in their purview that was given in their legislative authority. There's also federal proposals. I know there's some been in the news regarding the Credit Card Competition Act. That is a major issue that we are dealing with. That is a government overreach. It is a business mandate. And the most important part I want to stress to this group is jeopardizing your financial security. The payment rails that we work with are very, very secure, and there's a significant investment in there, and there's nothing stopping anybody from entering that marketplace. But if something like the Credit Card Competition Act goes into effect, we don't know where your personal financial information could go. It could go outside this country. And that's very concerning. And so we are definitely heavily motivated to continue that opposition on that bill. We do have our current U.S. Senator in Kansas that is pushing for that. And we're trying to work with him and his team to educate and talk to him about the effect that it has on the community banking model. And your credit card reward points, your choice of your rail that you want to choose. You choose that Southwest card. You choose that Marriott card. Something like this goes in effect, those choices could go away. On page 10, you'll see pushing back on regulatory burdens. Once again, we've been trying to, folks are trying to make us act as the police force, reporting transactions to the IRS over $600 to the IRS. Once again, we were successful in pushing that back last year, but we're continuing to push back there. But once again, we have to figure something out because the current process that is working on the regulatory side, on the safety and soundness, is working absolutely. There are banks that are done bad business decisions, just like any business. But from a regulatory burden, there is too much on this front, and that's the reason why our association has grown so much to provide those services. On page 11, you'll see an economic outlook from the Federal Reserve Bank of Kansas City. We work very closely with them. I'm not going to go in depth, but on this piece, besides on page 21, you'll actually see the interest rate and how it's gone since 2015. 550 basis points is unprecedented quick growth, not in terms of the total, but in terms of the quickness. It rapidly raised, and you'll see that chart on 21. It is expected, or at least some people believe, that they will lower interest rates this year, and they actually put that in here, what their forecast is or what they think the interest rates could be. And once again, just to predict projection. On the last page of the Federal Reserve data, Federal Reserve presentation is just some contact information. They put this economic outlook out every month. They have an economic review, great resources for you if you want to dive deep into this issue. They're a good resource. I know I've talked with Chairman Hoheisel about getting this group to the Federal Reserve Bank in Kansas City, and have spoken with their team, and they would absolutely welcome that. So once again, you need to find something on a legislative calendar that works for that. You all are a little busy and it's hard to schedule that, nor do we want to take time away from other committees and other efforts you're trying to do. On page 25 of the testimony, you'll see a spreadsheet talking about the Kansas privilege tax and the Kansas corporate income tax. Kansas banks do not pay the corporate income tax. They pay the privilege tax, which is our income tax. The reason why it is different is because Kansas banks are taxed differently on the income from the U.S. Treasuries and agency securities. That's why the rate is set differently, because we're taxed differently in other ways. And so that difference in that rate is supposed to reflect that. We are engaged in the tax discussions this legislative session, and the point of this spreadsheet is to highlight why those numbers are what they are, as they were in Senate Bill 169 last year, as well as in the governor's plan that she unveiled yesterday. If you're going to lower corporate income taxes, you should lower Kansas bank taxes too. They're, once again, we're businesses as well. So all we're asking is for that same equal corresponding rate reduction in there. If you're going to lower corporate from 6 to 5% or 7 to 6.5%, that's a 7.14% reduction. That's all we applied to the same on the normal rate of the Kansas bank tax. So when you see 1.94% and numbers like that in the bill, that's how we get there. So that's purely just informative on that piece. I'd love to chat more. The commissioner mentioned UCCC modernization. I do want to give a tip to my colleague Kelly Van Zoll, who has been leading those efforts and working with industry state groups and working with language, with General Counsel Railer, other stakeholder groups to bring modernization. As you heard the commissioner say, 1974 was the last time there was modernization. 1999 was the last time there was any type of tweak to it. So the time is now to try and update that code. And our goal, and we worked, Kelly specifically, worked very hard in the interim to try and bring groups together, to bring a comprehensive solution that everybody agrees with. And we do feel very good about where we are currently at. The other issue on the horizon that I'm going to talk about with this group as well is public funds. And this is an ESG conversation. This is just public funds and what the state is doing and investing back in itself. We do think the state can do a better job of the Pooled Money Investment Board, the Municipal Investment Pool, our linked deposit loan programs, collateralization of pledging securities for public funds, because we have to make sure if there's public deposits coming in the institution, we have to make sure that they are safe and secure. There's a lot of things we can do on that front. I don't anticipate any legislation this year, Mr. Chairman, but do believe there's going to be some education efforts, and we would request that because we do think a comprehensive bill is needed in the future, maybe not this year. On page 26, I put this in my packet last year regarding crypto. I know me and the chairman have had many conversations, and ranking member Shu as well, about cryptocurrency, Bitcoin, Dogecoin. I mean, you name it. It is a very volatile market. As I said last year, people are making money. A lot of people are losing a lot of money. There needs to be safeguards, and there needs to be proper regulation when we're talking to crypto-related assets. On the last attachment I have on page 29 of my testimony is regarding cannabis banking. I want to be very clear, the KBA does not have a position on whether legalization of cannabis should, we don't have a position on that. But what we do believe that if it is legal, leaving those type of businesses right now unbanked is not an option, because right now it is still a Schedule I drug, which jeopardizes our FDIC insurance. So we do need some federal action, federal legislation to make those safe and secure. And so we're working with the U.S. Congress on that issue, and has passed the House multiple times, but it gets tied up in other conversations and other issues of decriminalization, et cetera. But we're continuing to advocate because we do believe there's a void in those services right now that are not safe. So, Mr. Chairman, I appreciate the opportunity, appreciate this committee's work, and I will stand for questions at the appropriate time.
I appreciate that. Committee, do you have any quick questions for Alex, Representative Neely?
Good to see you, my friend. Congratulations, Kelly. Glad you said what JW was. I thought maybe he was security, that you needed anything, that he was a bodyguard or something.
We need that.
Are the statistics on the number of banks that have gone down actually buildings or facilities? Because as those other banks are acquired and everything, are we actually losing banks because of that, or is that about staying the same because of the acquirements of?
Sure. No, great question. That's a very it's very rural and urban, to answer that very succinctly. urban has significant amounts of access to credit. I think there's 118 institutions in the Kansas City metropolitan area alone. What you're seeing is when you lose that charter, when you lose these rural communities, when you lose that bank, you're losing that local leadership. And the talking about the failure last year, that became a branch. There's no longer a president CEO in that community. There's no longer that local leadership decisions in those communities. So where we're seeing a loss of the access to credit is in these rural areas specifically. And yes, it can lead to loss of facilities without a doubt, but it starts with the loss of the leadership first before that happens.
Any further questions, committee? Seeing none. Alex, thank you. Thank you for including this crypto piece in and mentioning Doge. Unfortunately, Representative Anderson, my colleague, does not serve on this committee any longer. So, and I do want to congratulate Kelly on her promotion and thank her for all her work on a UCCC update. These meetings we put together this summer, they were great. We made a lot of progress. It was just like, the hamster got in the wheel and started running, and Kelly just ran with it. So thank you, Kelly, for all that as well. So thank you, Alex.
She's been working really hard. And, when I had to come to the session the first time testify, might have been some cobwebs, a little bit of rust on there, but I did the best to shake it off, Mr. Chairman.
All righty, committee. Up next, we have Sean Mitchell, President and CEO of Community Bankers Association of Kansas. Sean, welcome to the committee, sir.
Good morning, and thank you, Mr. Chairman, members of the committee. Don't worry, I will get you out of here on time. I'm kind of used to these things. This is my 16th session, so I'll give you tons of information, but then you can disseminate it. And if you want to ask for further questions, I'm always available. But I am Sean Mitchell. I'm President and Chief Executive Officer of the Community Bankers Association. I am a banker by background. I started my banking career in 1995, working for 3 different Kansas institutions. My very first one, I love saying, was the Bison State Bank. $6 million in assets for employees back in 1995. Now the charter is actually in Overland Park, but that location is still open. I then worked for a correspondent bank, Bankers Bank of Kansas in Wichita. Ultimately, then I was president and CEO of the Farmers and Merchant State Bank in Wakefield. And then 16 years ago, got the call to come up and run the Community Banking Association because they'd never had a banker actually at the helm of it. So I've been doing that ever since. So I still misspeak a lot when it comes to legislative ease. I speak like a banker. That's just how I think. Melissa's looking at me because she knows I've done this a long time. So I come from that perspective. I represent only community banks in the state of Kansas. So when you think of the really large national banks, I don't speak for them. They have no say in what we do whatsoever. Only locally owned, locally controlled community banks in the state of Kansas. That's the only big difference between us and the KBA. We're friends. You're going to see us 99.9% of the time. We agree. I'm here for that 0.1% when I think there's a big bank voice coming in that does not serve our local community banks. That's why I'm here. I run a very efficient staff, a very small staff. We also use the services of Little Government Relations, Mallory Lutz back here, Stuart Little. They speak on our behalf because obviously small shop, we can't be everywhere. So with that, that's who I am. I speak like a banker. I think like one, for better or for worse. And I'm an analytical nerd. So of course you've got the analytics from me. These are community bank only focused on what we consider a community bank in the state of Kansas, as well as nationally. So you can compare our Kansas banks and some of their stats with the nationals. And what you'll find is our banks are doing very well. We've got a lot of seasoned management out there that know how to run things, but I do agree with the commissioner. That's my number one concern is aging management, aging ownership. Finding people to take those places is not easy, especially when you're in a rural area. It's just hard to get that kind of talent. But we help provide solutions and that for that. So with that, I will leave you with the information. Feel free to contact me anytime. Or also the bank commissioner's office. They've got staff that can answer any of these questions, and it's absolutely unbiased. So with that, thank you, Mr. Chairman. I'd stand for any questions.
Anybody have any questions for Sean? Seeing none, Sean, I got one question here. What is, with the community banks, what is staffing like right now with the tight labor market? How is that impacting our community banks?
Staffing is what depends on where you are. Again, if you're urban, Well, they still have issues. I can't say they don't, because we've got people believing one bank to go to another. I actually know of a bank teller in a rural area who went to work for Love's because it was 25 cents an hour more. Gave up health care for 25 cents an hour. It makes no sense to me, not at all. The rural banks, they're finding ways of getting around it, compliance, outsourcing that, like the KBA's program. We have something that is similar we use with our sister associations. That's how they're getting around it. But if you're a young banker and you've got some experience, you can really go anywhere you want to go and write your ticket, because we're missing a lot of those. It's a concern. Our banks are finding ways of doing it with mergers of equals, examples of things, different things like that. Fort Hays State University, the Robbins School of Banking is a great way, but it's going to take time to get them through. So they're all having issues, but they're finding ways of working together and sometimes sharing employees. You can't share lenders, but you can share compliance people, those sort of things. It's an issue, but so far banks are learning how to do more with less.
I appreciate that. Last call for questions for Sean. Seeing none. Thank you so much, sir.
Thank you, Mr. Chairman.
All right, committee, that concludes all the work we have today. Is there anything else for the good of the committee? Seeing none, we are adjourned.